Bitcoin's price is absolutely ripping again, and it's worth taking a step back to take a look at why. Billionaire Jack Dorsey recently sat down with the CEO of the largest sovereign wealth fund on earth, a $2 trillion monster that holds 1.5% of the world's public equities. They weren't talking about oil, stocks, or bonds. They were talking about Bitcoin. And I'm talking about Norway. Let's take a look at what he had to say.
Around. Enter Bitcoin. Bitcoin is a protocol for moving money around. If Bitcoin is used not just as a store of value, but as a currency to move money around between people or between businesses and people or businesses and businesses, as that becomes more and more a thing, which I do think it becomes over the next 5 years, then we can launch Cash App and Square in every single country that has the internet. And that allows us to serve more people better, faster. And because Bitcoin is open, it's not controlled by one company, it's not controlled by any one government, it's completely transparent. People can see what it does, and we can solve all the problems that we would task with governments and companies to solve by doing it transparently and by doing it openly. Because again, it's the internet and it goes to internet principles. So I'm hoping these financial systems take on more internet principles and we can truly be an internet company instead of going market by market by market, which is just a really slow way to build for the world. You can't build for the world. You can only build for these particular markets that you happen to be approved in. And again, you have to be approved by another company. You have to be approved by these things that don't have your interest or even their customers' interests at heart.
So what needs to happen for Bitcoin to function more effectively?
I think it's happening right now. Like more and more people see that it's valuable. Every time that number goes up, people get more interested in it. I don't believe in Bitcoin in its final stage as just a store of value, but I think it's a necessary part of the path to get to, I think, the next big one, which is remittance across border, moving money between businesses, moving money between people across borders, which is happening in many countries outside the United States and Western countries today because there's no other options. And then it gets to currency.
Very interesting. And listen to that point that he made. As that number continues to go up, more people see value in it. So we're at a point where this isn't speculation, nor is it an isolated incident. It's proof that sovereign entities are quietly preparing for the end of the fiat era, and they're eyeing Bitcoin as the escape hatch. If that doesn't scare you, it should, because it means time is running out, and those that wait on the sidelines now are going to be accumulating Bitcoin at much, much higher prices. Now, just days ago, the US government itself admitted that the dollar's days are numbered. They passed a bill, the Genius Act, that screams one thing. We must delay the inevitable and kick the can down the road one last time. We must stall Bitcoin's rise while we prepare. The clock is ticking. So don't go anywhere, because today we're going to outline what the Genius Act is, how it intends to drag out the dollar's imminent death, and how even this may backfire and rocket Bitcoin's price higher and faster than ever before. I'm Ben with the BTC Sessions, and this is your weekly session. All right, let's dive in here. And again, we're going to continue on. And I want to frame up this next section before we get into the Genius Act by the state of affairs in the US right now in terms of debt, in terms of inflation and all of that. And this is a tweet from Kevin Gordon here. He says, this is a breakdown of the GOP tax bill from the Wall Street Journal. And this is basically the proposed expenditures in the future for the US government and deficit changes through 2034. So looking out basically a decade. In total, increases the budget deficits by nearly $3 trillion, trillion with a T, over a decade. So this isn't already the existing deficits. This is piled on top of it. Exorbitant amounts of money continuing to be spent above and beyond what's already being spent. People were expecting budget cuts, not this. This is way, way worse than it already was. And let's take a look at the Treasury Secretary. He was on CNN the other day, and he had something to say about this bill and about how this deficit would be managed. So let's listen in here.
There are several components there. So if we unpack it, there is the growth, the potential growth of the debt. But what's more important is that we grow the economy faster. So what we've seen under the past 4 years, and what we inherited, I inherited 6.7% deficit to GDP, which was the highest deficit when we were not at war, not in a recession. So we've been trying to bring down the spending, and we are going to grow the revenue side. So we are going to grow the GDP faster than the debt grows, and that will stabilize the debt to GDP, which even Secretary Yellen and I agree is the most important number.
Now, again, this is an exorbitant amount of spending that they are proposing here. And he's basically saying that, hey, we can't stop spending. And so we're not even going to try. What we're going to try and do is build up our economy enough that it kind of outpaces how bad we are at spending. And Lynn Alden, one of my favorite people, of course, she's got her tagline, and she couldn't help but weigh in here. They're basically in the nothing stops this train, so let's accelerate it phase. She's long said that there is no stopping this train. You have to continue to print to support what has already been done. Otherwise, the entire house of cards comes down upon itself. And we also had, again, here's Anthony Pompliano. He said, I had faith we were going to see a balanced budget, but it is now clear there is a near 0% chance of that happening under any administration. Doesn't matter, red or blue. Dollar debasement will drive asset prices until they bury me 6 feet under. And of course, we got to get the Lynn Alden here. Welcome aboard this train. You're part of the squad now. Yeah, absolutely. Absolutely. So how does all this relate to what we were talking about with the Genius Act, and what is the Genius Act? So let's take a look at that now. Okay, so the Genius Act, the Senate voted on this late Monday to advance the Genius Act, a bill that aims to regulate some cryptocurrencies. Now, it did face some Democratic opposition, but some people crossed the line. 16 Democrats voted in favor of it as well. And so let's dive in. The Genius Act concerns the issuance and exchange of stablecoins, a form of digital currency backed by another form of currency like the US dollar. So these are designed to be, of course, less volatile. People just want the stability of the underlying currency, and they just want the ability to spend it back and forth. Now, the bill sets rules for stablecoin issuers, and this is the important part, including a mandate that firms hold a reserve of assets underlying the cryptocurrency. That stipulation aims to protect consumers who otherwise risk a failure to cash out their holdings in the event of a rapid, widespread offloading of coins. And so what they're basically saying is, hey, you can absolutely issue stable coins, US dollar stable coins, but you've got to back it with something. And why would the US be so keen on the idea of more stable coin issuers? What do they want right now? What are two things that they really need? They can't stop spending. They can't stop printing. They need to issue more debt. They need more people to want dollars. So they need demand for that. They need people to buy US treasuries, and they need people not just in the US, but around the globe to have a demand for US dollars. And we have seen a shift away from utilizing US dollars to settle trade when it comes to oil. We see Russia and China and other countries saying, hey, we're going to start settling trade other ways. So this, in a way, will scratch both itches. If they get more stablecoin issuers. Why is that? Well, because number one, when you have a stablecoin and it is available to people around the globe, a lot of people in other countries that have also fiat currencies, but ones that are way worse than the dollar, sometimes hyperinflationary or just mildly inflationary, more so than the dollar, they want the better, harder currency. They want the one that's going to hold value better. And so they would prefer to have US dollars. So if you have more stable coins available around the world and more people issuing them, then it makes it more accessible for all. So, hey, demand for dollars up because more people can easily get their hands on them. But furthermore, I want to point to Tether. Tether is the world's largest and most circulated stablecoin issuer. And this is just from this week. Tether outpaces Germany with $120 billion in treasury bonds. And so Tether, again, the issuer of USDT, they reached a historical milestone, surpassing Germany with their $100 billion invested. The company now ranks the 19th largest global holder of US treasuries, overtaking not just Germany, but several other nations. This is wild. A stablecoin issuer with demand for treasury bonds that outpaces countries. Now, why are they doing this? It's actually a genius business model. So what happens when Tether is issued is it's actually somebody giving them dollars, depositing them into a bank account, and then Tether issues USDT in the form of that stable coin so people can more easily move it around. And so what do they do with that deposit then? Do they just sit it in the bank? Absolutely not. They want to get a yield on other people's money. So they go out and they buy a number of things, but largely US treasuries. Why? Because they get a percentage, whatever the current rate, interest rate is, they're going to get that on the treasuries that they purchase. And so for them, it's literally no risk. It's people give them money, they issue a stable coin, and then they say, okay, we've got this money, let's buy treasuries. The US government is not going to not pay us back. If worst case, they're just going to they're going to print more dollars to pay back the treasuries once it comes up to maturity. And so Tether just pockets that difference for nothing. They're issuing a stable coin. People are using that, and they use the stable coin to buy treasuries, which are going to hold the nominal dollar value plus interest, and they keep the interest. They're making money hand over fist with this. Now, so that covers the US dollar, the US government. They're happy. There's more demand for dollars. There's more demand for treasuries. Of course, they're going to want more stablecoin issuers, and they're going to want to encourage it and have regulations that say you have to be backed by something, because what are they going to back it with? Treasuries. However, how could this backfire? How could this actually massively accelerate the price of Bitcoin and the shift from dollars to Bitcoin? Well, we're going to stay on Tether here, and we're going to say, well, what are they doing with those profits? They get paid out the interest on the treasuries they're buying. What are they doing once they get that? Are they just banking the dollars? Absolutely not. They are buying Bitcoin. Tether currently has over 100,000 Bitcoin in its treasury. That's $10.8 billion. And this isn't slowing down. As they make more money, they buy more Bitcoin and they pile more and more into it. They're doing this because they see the writing on the wall. They know where this thing is going. The end game is not to make more dollars. The end game is to position themselves in a place where they can accumulate the next money, where they can accumulate Bitcoin, where they can get out of dollars, ironically using dollars themselves, and get further and further into Bitcoin. It's a genius way. You're utilizing the fall of the Roman Empire to build anew. You're utilizing the destruction of the US dollar to stack Bitcoin, and you're making a profit whilst you do it. It's genius. And this is not going to stop with just a single treasury for a single stablecoin. What do you think all of these other stablecoins are going to clue into and do with their profits? They're going to do the same thing. And it's not just Tether. There are more and more companies and entities and sovereigns that are coming in and establishing Bitcoin treasuries. Here's a tweet from NVK showing a post from bitcointreasuries.net showing entities holding Bitcoin at 202. He said just 2 weeks ago, this was 180. Bitcoin treasuries rapidly becoming the standard. And if you take a look over at bitcointreasuries.net, that graph showing the Bitcoin held in treasuries is going up and to the right at an accelerated pace. We're sitting at 3.34 million Bitcoin held in Bitcoin treasuries currently, and we are just getting started. So when I said it should scare you, it absolutely should. You are running out of time to stack sats. This thing, as Lynn says, nothing stops this train, and this train is getting a major, major boost. It is being accelerated like nothing we've ever seen, and the price is reflecting that. If you're enjoying the show, please do smash that like button. I'm going to be tossing it now to Nathan and Gary on the other side of the jump. They've got more insane news to get to. So we will see you guys in just a moment after a quick shout out to our sponsors. Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions. CoinKite has been in the game for years, creating hands down the best and most secure hardware when it comes to securing your Bitcoin. The Cold Card Q is an absolute powerhouse and my daily driver, and it's ideal for newcomers and advanced users alike. The Tap Signer gives you a low-cost, user-friendly option for those just getting started or for convenience when traveling. You can head to coinkite.com and use code BTC Sessions for discounts, or simply scan the QR code on the screen to get started right away. Looking for a simple and secure way to manage your Bitcoin on mobile? AQUA Wallet has you covered. It's user-friendly and puts you in full control of your Bitcoin with secure self-custody. AQUA also supports Lightning and Liquid Network, making fast, cheap Bitcoin payments and asset transfers easier than ever. Plus, it even supports stablecoins, giving you ultimate flexibility. Built on open source code, AQUA is transparent, trustworthy, and perfect for beginner and pros alike. Ready to upgrade your Bitcoin experience? Click the link in the show notes or scan the QR code on the screen now to download AQUA Wallet today. DEBIFI is the best and easiest way to borrow against your Bitcoin in a non-custodial way. Funds are held in a multisig escrow where you hold a key, and the platform allows for excellent hardware like the Cold Card Mark IV and the Q. You have access to flexible conditions, the best rates, and institutional grade liquidity. If you're looking to make use of your capital, don't sell your Bitcoin, borrow against it. You can head over to debifi.com to check them out, or simply scan the QR code on the screen. Securing your Bitcoin doesn't have to be complicated or invasive. With NUNCHUK's HONEYBADGER plan, you get state-of-the-art multisig with built-in inheritance planning and no KYC required. NUNCHUK is trusted by users to secure billions of dollars in Bitcoin. The HONEYBADGER plan offers 204 assisted multisig, guiding you step by step on mobile or desktop. It works seamlessly with hardware wallets like TapSigner, ColdCard, Jade, and plenty of others, so you're always in control. Plus, with non-KYC inheritance planning, you can ensure your Bitcoin goes to your loved ones. No private info needed. Take control of your Bitcoin today. Click the link in the show notes or scan the QR code on the screen to check out the HONEYBADGER plan.
All right, welcome back, everybody. Ben, you forgot to tell them to get their Lightning wallets out. And Gary, while I'm getting this ready, I see you've got that all-time high orange boa on there, my friend.
That's how you know it's an all-time high. I got the orange boa. $3 on sale at Party City, by the way, during their going out of business. So I'm pretty pumped about it.
Their loss was our gain. I
Indeed.
really appreciate that. So for you guys that don't know, of course, this is the Bitcoin Wishing Well. Anytime that you refer a friend or stack some sats, you stack some points and you can toss those in. Or somebody, please save up and get that orange Cybertruck. I really, really, really want to see that happen. So let's go ahead. Let's throw a coin, redeem some points, and see what we're giving away today. Come on, random number generator, something big. 355 sats. So go ahead, scan the QR code. If you find that it's not working, somebody got to it before you. And with that, let's continue on and jump into the news. So first and foremost, Gary, happy Pizza Day, my friend.
Happy Pizza Day to you, too.
Thank you, buddy. Thank you. Much appreciated. For anyone who doesn't know, and you should know if you're watching this show at this point in time, and if you're new, welcome. Enjoy the journey. So 15 years ago, Laszlo was the first person to use Bitcoin in a monetary transaction. He bought 2 large pizzas from Papa John's, if I'm not mistaken, for 10,000 Bitcoin, currently valued at $1.1 billion, which is just, I found myself, Gary, kind of ruminating and thinking about this earlier today. How incredible it is that we actually got to observe and document like a monetary system, monetary phenomenon kind of emerging. I mean, people always talk about, especially if you're talking to a gold bug, trying to bring them on board, trying to educate them. They're like, well, gold has been money for thousands of years. And it's like, they're right. It was, right? It was very much so money for thousands of years. But at some point in time, there was one dude, there was one gold Laszlo who for the first time said, look, I'll trade you 2 check-ins and your finest fur for this shiny rock that I found. And it was accepted. And that was the first time that gold was used as that medium of exchange beyond just kind of hobby and collection and pretty. I'm curious if you have any thoughts on this.
Well, I mean, it's certainly very cool that we get to see this like first documented case on Twitter or wherever it was first posted. I mean, does that mean it's the very first time it was ever done? I just, again, something showed up in my feed, as always random things do, just yesterday, which is a study that happened, I guess, about 13 or 14 years ago, how scientists taught monkeys the concept of money. And of course, you trade money to get food from the humans and like, oh, this is how money works. And almost immediately after that, they had their own kind of monkey economy. And the very first thing the scientists observed the monkeys trading for money was
sex.
Of course.
Sex,
there you go.
Of course.
So
the oldest profession, apparently. Every economy is built on it.
Were people using Bitcoin to get some tail before they bought pizza? I don't know. Maybe.
If that was the case, it means that somebody lost potentially like multiple billions of dollars because they just couldn't make some smarter decisions. But with that, I want to continue on. It is Pizza Day. It is all-time high day, which is fantastic. And I thought before we got to jump into some of the exciting news, some of the things that we've seen recently, I just want to take a little victory lap. Everyone who's been here has been hanging on, whether it be for a year, whether a couple months, maybe you bought 70 like just a couple of weeks ago. Let's take a moment to just appreciate it. And so I want to pull up some of my favorites from previously. I'm not sure if you remember this interview on Joe Rogan, but I want to play Peter Zahine here for just a second. We were talking about this earlier. Bitcoin is not an intelligence test. Some of these smartest people completely reject it. They can't figure it out. They can't get behind it. And I really think that Bitcoin is it's a humility test and it's a work ethic test, right? There's so much that you have to dive into, to pull apart, to tease apart, to understand what's going on. You have to be curious and you have to be humble enough in order to be open to the idea that your existing framework might be wrong. So let's just kick it off with Peter here and see what he had to say. When was this? Like 2 years ago on Rogan? This is a great one.
There's no intrinsic value to this asset. And now it's starting to be priced appropriately. So it has what's Bitcoin at? 16,000? It has another 17,000 to go down.
Duh, really?
Yeah, there's no intrinsic value to this product.
Okay.
That is one of my absolute favorites. And the reason it is, and maybe it's because I'm just a jerk, but the the arrogance of which someone says something like that, I just find it ecro, buddy. Gary, any thoughts on that one?
No, I think if anything, I would be with you on the arrogance part. Like, it's completely understandable that intelligent people, some of the most intelligent people I know, just don't get or are not into Bitcoin. And that's completely understandable because, like you said, it's not a measure of your intelligence. It's a measure of your ability to be humble, reconsider your priors, do the work on this one specific particular thing in life. But I mean, the confidence and
smugness.
This I mean, I want to say smugness, but I'm like the king of smug, so pot kettle black.
Yeah.
But this certainty with which is like, no, this definitely isn't. I mean, even today when I talk about Bitcoin with people, I never say anything is 100%. I say like, yeah, I'm pretty darn sure, like 99.9. Is it possible that somehow this system, which seems to be secured against almost any way to beat it, could somehow get wrecked? Is there a flaw? There could be. I'm not smart enough to know all the ins and outs, but from everything I've read in terms of, the hash power that protects it, the amount of energy that it would take to disrupt it, even if it could be disrupted, you could fork in a different direction. Oh, and the idea of like quantum computing, I mean, that's so far off, and you can. I just don't see how it happens. That doesn't mean it can't. It doesn't mean I'd ever sit there and say, no, 100%, nothing will ever happen to Bitcoin. Even I am never going to say that. So yeah, it's probably like the ignorant certitude. I'll coin that phrase, the ignorant certitude of this guy that, whatever. But hey, people learn, everybody learns, and everybody gets Bitcoin at the price they deserve.
Sounds like you're just humble and open, and maybe possibilities could possibly happen. Seems like you're a great candidate for Bitcoin there, Gary. makes perfect sense to me. And funny enough, I can say with 100% certainty that Bitcoin will never go to zero because I'd rather go down with the ship than stay on fiat. So I will be that idiot. I will happily, just like Laszlo that we celebrate today, I will happily trade 2 pizzas for 10,000 Bitcoin at any point in time. I will make that trade. I will make it happen. I'll take out a line of credit if I have to. Continuing on, I just want to point out again, just a little bit of fun here. We had the Vanguard CEO, Tim Buckley. I'm not going to play this one, but I just want to remind everybody that Vanguard did not get in on the best performing ETFs of all time. But to their credit, I suppose as well too, they don't do gold either. So I guess money's not their thing. Moving on, I just wanted to take a quick look. If you haven't checked it out, Bitcoin is dead. We're going to bitcoindeaths.com. Wonderful to see that graph of all the obituaries of Bitcoin over the years. And I thought we'd check out the leaderboard. Currently in number 1, Peter Schiff. No surprises there.
Of course.
18 obituaries. Bitcoin was born out of the financial crisis of 2008. Ironically, the financial crisis of 2025 will kill it. Oh, okay. It's dying this year. Thank you, Peter. Much appreciated. Warren Buffett. Bitcoin is a gambling token and it doesn't have any intrinsic value. 8 obituaries on that one. And quick side note, I just got like a bit of an axe to grind. I hate the term intrinsic value much.
Thank you.
So much. There is no such thing as intrinsic value. All value is completely subjective. If there's no humans on earth, nothing would have value because it's something that we ascribe to it on an individual level. And anytime someone says intrinsic value, all I hear is like predictable, consistent demand. There's no actual value. It's just like, yeah, people have used this thing and like using this thing and have for a long time and probably will continue to. Seems like that one kind of bugs you as well, too.
No, I mean, even if you want to go with the idea of intrinsic value, like I can use this thing for some sort of practical application. People make the argument with gold. Oh, it's used in computer circuitry and, gold teeth or, whatever else. Again, of course, like you said, that's something that humans came up with because, before then, if a 20,000 years ago, if a caveman stumbled upon in the woods and found a piece of gold, there's nothing intrinsically valuable for him about that. But let's say you even do want to go down that road of intrinsic value. What is intrinsically valuable about the piece of paper that is the US dollar? Like, can it like cauterize a wound if I trip and fall? If I need to go to the market, can I hop on it like a magic carpet and it takes me there? No, there's nothing intrinsically valuable about this piece of paper other than the fact that other people value it and will trade for it. And the reason they value it is because it's backed by men with guns in a nation state capital. And that's pretty much it.
Yeah, there's intrinsic value in not being taken out by the IRS. That's basically the entire rule of it right there. And even if you're going further deep down that rabbit hole, anything having another value outside of its monetary use case actually detracts from it as a money as well, too. Money is the thing that we acquire, not for consumption of itself. So if you're consuming itself, it's actually disrupting its ability to be money. But we will continue moving on, guys. Thank you. I just want to take a little victory lap there. I think it's worth taking a pause, having a bit of fun. The next one I have up, the big news of the day. We've got Texas passes SBR, the Strategic Bitcoin Reserve, the SB 21 at a vote of 101 to 42. We're seeing the state adoption continue to chug along. All that's left here is for Governor Abbott to sign off on this one, which I'm pretty hopeful of. I think it was, if I'm not mistaken, it was Katie Hobbs from Arizona that vetoed the other version of the Arizona bill that was going through there. Democrat, Republican, I think he's going to take basically, I think the Republican stance right now very much so is favorable Bitcoin. I hate that we have to play sides like that.
Yeah.
But as long as it's chugging along, I think that everybody eventually kind of gets on this train. And if I'm not mistaken, in the Genius Act, whatever it was, for the stablecoins from that Ben was talking about yesterday on Why Are We Bullish at the beginning there, that Democrats did cross the floor. I think I've mentioned this before. I think Bitcoin is becoming a basic.
We'll go with that. Basical. That's the new word.
It's becoming basical. Thank you. I created it. It's becoming a basical kind of political stance where it's almost like I'm going to lower taxes. I'm going to give you more free shit. That being pro Bitcoin is just going to be a default position. And it's kind of leaking into the political system. It's trudging a horse in its way in. So very excited for the people of Texas. Did you have any thoughts on this recent announcement there, Gary?
I mean, it just seems like this is all inevitably on its way. And, like we say, Bitcoin's going to do what Bitcoin's going to do. I could sit here and have my, libertarian hangups, the idea like, do I really want government owning this stuff? And then it's a question of, okay, well, maybe I don't want government owning it, but maybe if government does own it, they're less inclined to try to restrict it and punish people who have it because now they have skin in the game. I mean, you could theorize this all day long. I don't know. Bitcoin's just going to do what it's going to do, and people are going to get onto it. There's going to be institutions, there's going to be governments. It's going to happen. So get in while the price is low. And that's the crazy fucking thing. 111 is still crazy low. I mean, that's the insane thing. It doesn't mean it won't go down from here. It could, I don't know, it could drop down to 70, 60 at some point next year. I don't know, which is why, again, if you're into Bitcoin, you should be thinking long-term. Never get too high, never get too low. Don't spike the football, even though we just did sort of spike the football.
Did spike the football.
But just, understand if you're in it for the long haul, you'll be fine. And just accept that there's going to be downturns. They will happen. Just stick with it. You're good.
100%. I want to point out here, Texas economy is the second largest in the United States with a gross state product of 2.709 trillion. This makes it larger than the economies of many countries, including my socialist backwards part of the world, Canada. It's larger than Italy, and it's also larger than Russia. If Texas were its own country, it would be the 8th largest economy in the world. And speaking of Russia, just want to point this out. Russian central bank to lift restrictions on financial instruments tied to Bitcoin. More favorable environment there, which makes perfect sense because if you remember from just a couple weeks ago in April, we had China and Russia settle energy trade in Bitcoin. They're looking to get outside that US dollar system. And again, they have, somewhat of an alliance in these things too, but we're all kind of adversarial countries. They're going to need that neutral reserve asset to move between them that nobody can screw with. We had Bitcoin is increasingly being used in international trade, particularly by countries looking to avoid US-controlled financial system. Russia and China have reportedly used Bitcoin to settle energy transactions. And Texas, Russia, energy, I think it's very important to note. We also had some speculation from Jack Mallers recently. Strike founder and 21 Capital now as well too. Jack Mallers just said UAE is buying billions of Bitcoin and mining BTC. And we have a little clip here that I want to play for you because it's interesting his thought process on this.
This is probably a rounding error. And you can open a Bitcoin chart, you can open a gold chart and see where the money's going. And when you see filings that you guys think the Abu Dhabi Sovereign Wealth Fund has a $500 million position in an ETF in America and they don't have any physical Bitcoin and they aren't mining Bitcoin, are you out of your mind if you think that's true? No way. This is probably a rounding error of their position. So you're seeing global capital flows be entirely reordered. And so since the last few weeks, Bitcoin has drastically outperformed the NASDAQ. Drastically. And you can open a...
So with that, Gary, the one thing that I saw, that common thread that leading these ones is that I think it's going to end up being the big energy reserve, big energy countries that have the most incentive to trade their energy for Bitcoin versus trading it necessarily for US dollars, things that can be printed out of thin air. That it's kind of going after that exorbitant privilege of the US dollar to basically print paper, more or less, and then trade that for energy. And I think that we're going to see continued adoption in this sense from the energy rich nations. And I think at the same time, this would also explain why the resource poor nations are going to be adversarial, try and clamp down on it, throw in extra restrictions, try and, quell it as much as possible. And what I'm thinking of is a place like the UK. The UK's restrictions on retail getting into Bitcoin, withdraws, all the additional regulation and scrutiny that they're putting in place, they're making it very difficult for people to get into Bitcoin unnecessarily. And it's not a favorable environment. But if you think of it from that sort of perspective, they're a resource poor country. They don't have energy. They have to import everything. Their biggest, I think, like export, their biggest industry is financial systems. It's the finance markets. They're trading in derivatives and foreign exchange, and they're doing all that middleman shit where they're taking a massive cut and getting stupidly profitable and stupidly rich for really adding nothing in terms of goods or services, right? They've just inserted themselves into the corrupt existing system, and they're just collecting a spread while moving shit around, while other countries that are actually providing you with hydrocarbons and lumber and resources and innovation and technology, they're not going to want to play that game anymore. And I think that that's where we're going to see kind of the divide that I think as we continue going forward, and we're still very early, and then I'm curious your thoughts on this, that we're going to see countries, they have to take a Bitcoin position now, whether good or bad. They have to say, we're going to try and stop it, or we're going to try and throw some hurdles up in the way. We're going to try and really, you can't stop Bitcoin, just stop the population from being able to use it. But they're going to try and restrict or clamp down or stop Bitcoin. Good luck. Or they're going to be like, nope, we've got stuff that we can sell for this. We're going to ride the wave of the monetization. We're going to take advantage of it. But I don't think you can have a neutral non-position anymore. I think every nation is essentially going to have to make this decision for themselves. So Texas, Russia, UAE, what are your thoughts on this, Gary?
I mean, I wonder how much we're going to see of kind of similar to individuals who choose to buy or not buy Bitcoin. Because, there's that kind of bell curve of the people who were really rich, who are like, okay, I have all this wealth. I need to find a place to hide it and keep it safe from the money printer. Okay, maybe Bitcoin's a way to go. And you have the really, really poor people who are like, I have nothing. The whole system is keeping me out. I can't save on dollars or whatever my currency is in my native country. Maybe Bitcoin is this one escape. And then you have people in the middle who, much like, somebody I know who's a very intelligent person who is doing well for himself, lives in a nice suburban house, neighborhood, everything. And he has a lot of his investments in traditional places, stocks, direct company investment, obviously real estate. And for them, it's not something that they really feel the need to do one way or the other. They don't have a big pool of capital sitting there they just need to do something with, but they're not extremely poor either. And I wonder if it'll be kind of a similar case where it's the huge energy resource rich countries, like you said, like, oh, we need to find a way to put money into this, or people like the United States where we can just print the money and find a way to buy Bitcoin. And the really, really poor countries are like, hey, let's take a chance. We have nothing to lose at this point. Whereas, like you said, you have places like England and like the traditional Europe, Western Europe, who are sort of established. It's older money. They are fine in their system. They're not going to be poor anytime soon, but they don't feel the need to go and take any extra wealth and put it away from the things they already know. They're comfortable. And when you're comfortable, why mess with success, so to speak? So I do wonder if those are going to be kind of the last countries that jump on here. Maybe not. I don't know.
I got to say, you pointed out something and I didn't even realize it till you said it. And I was like, oh my God, it's right there in front of me the whole time. Traditional investments is like the greatest psyop that I've heard in a long time, because traditional investments is savings. They've successfully conditioned the population that like, no. The traditional thing that you should be doing is buying S&P 500 stock.
Yes.
Right. And you're going to need mutual funds, and you're going to have a broker. You have to pay somebody to sit you down because you can't do it on your own.
Yes.
That would be no good.
Mm-hmm.
You have to have somebody sit you down and do it for you and collect the spread and get really rich and have a lovely lifestyle as a result.
You should be gambling on these companies that you know nothing about beyond what you might have read in the Wall Street Journal one day.
But you're right. Everyone calls it like traditional investments, right? Oh, that's the safe route. It's definitely a sign of the time. So continuing too with that sort of investment, a couple things I just wanted to point out here quickly as well. We've got in a portfolio filing today, Blackstone Alternative Multi-Strategy Fund reported owning 23,094 shares of IBIT. And interestingly enough, anyone who doesn't know that BlackRock actually was a spinoff from Blackstone originally as well too. So they're buying their cousins' ETF shares. So we're seeing continued kind of corporate and institutional adoption. And I do think that really is the narrative of this cycle. I know you pointed it out before, and we'll jump into that in a second. And the second one I had too, shout out to Pete Rizzo, who's on Why Are We Bullish yesterday. If you haven't checked it out, go check out that episode with Craig Raw, Pete Rizzo, and Joe Nakamoto. It was a wonderful rip. But we had $660 billion Susquehanna reveals about 300 million more Bitcoin in Q1. And they are a privately held global trading and technology firm. And we're seeing this corporate adoption chugging along, but you actually pointed out something to me before we sat down here. And I think it's very interesting and kind of telling, and you know, in some ways, actually a little bit kind of sad. You showed me this shrimp addresses chart here, comparing the previous cycles and where we are currently. Gary, can you tell me a little bit more about this and kind of what your thoughts are?
Yeah, thank you, Bitcoin News, by the way. I saw that on your little Twitter feed there. Credit to them. But the idea that addresses in wallets with under 1 Bitcoin have gone down. They've not gone up. And, you know, you can maybe speculate, well, maybe people have accumulated more. But like you pointed out to me, Nathan, because I'm an idiot, there's no way to tell that with just one wallet because you can't figure out the XPub. So it could have been different addresses with different UTXOs. For those laymen listening who don't know what a UTXO is, it's just like a little individual unit, $1, $5 portion of Bitcoin. You wouldn't be able to tell that they're all necessarily in the same physical wallet with different addresses. So this just links to addresses. So yeah, it's not, it's going down a bit, and it is a bit odd because usually we would imagine, you know, retail would pump like everything else, but it doesn't seem to be. And I went on mempool when we saw the 111,000 high. I'm like, oh man, Sats rebuy transaction costs must be through the roof. No, lower than ever. 1, 2. I'm a bit baffled. I don't know what's going on.
No, I'm kind of right there with you. I think that we are very much so, even though it's all-time high, Bitcoin's at 111,000. And I think it's going to be a fun summer for sure. I think we're going to have a sideways and up kind of summer. The retail's not here. I'm not getting any texts. I'm not getting any calls. I wonder if they feel priced out. I know we were talking about this beforehand too. You thought that, you know, last cycle, everyone was talking about how this is corporate adoption, but it didn't really happen. And I think that that is happening now. And similarly, I think with all the talk, even of nation state adoption, I think this is kind of the warm up, the introduction, and perhaps the real nation state adoption comes in the next cycle. But retail still hasn't shown up. There's little activity on main chain. It's still quite cheap, quite affordable to send transactions around. And you and I were doing it all the time. Now I know there's Lightning and other layers, and I know that we've got the ETFs as well too, and those are going to draw some of the transactions away as people pile into those. But even just boots on the ground kind of feel, I wonder if it's a sense that they feel priced out at this point, that like they have that kind of unit bias that like, oh, I can't possibly catch up with Bitcoin at 111,000, having no idea, you know, this is taking on the treasury market and the real estate market. We've got a lot of room to still grow here. Or if they got burned in the previous cycle. I know I saw recently too some Google Trends searches for Bitcoin. It's all crickets, man. They're not here. So if this is a kickoff for the next part of the cycle, maybe a good little bull run here as well, I still think we have the FOMO moment on the horizon. I think we still see retail try to pile in, leverage go crazy later on. But hey, it's just speculation. I still think the cycles are intact, and I'll continue to think so until I see otherwise. But with that, we're going to wrap it up. We're going to move on. We're going to take a quick break for sponsors. When we come back, one of the most successful and widely used Lightning wallets on the planet is making a return to the US, and there's been some upgrades around as well too. So stick around to find out that from Ben, as well as some continued dev drama and more after the break. And reminder, everyone, if you're enjoying this, if you're finding it helpful, please do hit that like button, hit that subscribe button, leave a comment down below. It is really helpful, and we'll see you in just a couple minutes.
Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions. CoinKite has been in the game for years, creating hands down the best and most secure hardware when it comes to securing your Bitcoin. The Cold Card Q is an absolute powerhouse and my daily driver, and it's ideal for newcomers and advanced users alike. The Tap Signer gives you a low-cost, user-friendly option for those just getting started or for convenience when traveling. You can head to coinkite.com and use code BTC Sessions for discounts, or simply scan the QR code on the screen to get started right away. Looking for a simple and secure way to manage your Bitcoin on mobile? AQUA Wallet has you covered. It's user-friendly and puts you in full control of your Bitcoin with secure self-custody. AQUA also supports Lightning and Liquid Network, making fast, cheap Bitcoin payments and asset transfers easier than ever. Plus, it even supports stablecoins, giving you ultimate flexibility. Built on open source code, AQUA is transparent, trustworthy, and perfect for beginner and pros alike. Ready to upgrade your Bitcoin experience? Click the link in the show notes or scan the QR code on the screen now to download AQUA Wallet today. DEBIFI is the best and easiest way to borrow against your Bitcoin in a non-custodial way. Funds are held in a multisig escrow where you hold a key, and the platform allows for excellent hardware like the Cold Card Mark IV and the Q. You have access to flexible conditions, the best rates, and institutional grade liquidity. If you're looking to make use of your capital, don't sell your Bitcoin, borrow against it. You can head over to debifi.com to check them out, or simply scan the QR code on the screen. Securing your Bitcoin doesn't have to be complicated or invasive. With NUNCHUK's HONEYBADGER plan, you get state-of-the-art multisig with built-in inheritance planning and no KYC required. NUNCHUK is trusted by users to secure billions of dollars in Bitcoin. The HONEYBADGER plan offers 204 assisted multisig, guiding you step-by-step on mobile or desktop. It works seamlessly with hardware wallets like TapSigner, Cold Card, Jade, and plenty of others, so you're always in control. Plus, with non-KYC inheritance planning, you can ensure your Bitcoin goes to your loved ones. No private info needed. Take control of your Bitcoin today. Click the link in the show notes or scan the QR code on the screen to check out the HONEYBADGER plan. All right, we are back in, and yes, you heard correctly. Wallet of Satoshi is returning to America. So as a reminder, Wallet of Satoshi left the US and removed itself from US app stores a while back, right in the fallout of the Samurai Wallet, privacy wallet devs being arrested and the servers being shut down. There's a lot of uncertainty in and around the legality of any sort of custodial Lightning wallet without KYC inside the US. Now, other wallets have since returned in light of the new administration's friendly demeanor when it comes to Bitcoin in general. But Wallet of Satoshi has decided to tread lightly. However, they've apparently been doing some work in the background, and they tweeted this out just a few days back. America, get ready. A fully non-custodial Wallet of Satoshi is coming, USA approved. Lightning fast, beautifully simple, as only Wallet of Satoshi does it. So it sounds like they've got some sort of a solution up their sleeve that doesn't rely on them as a custodian, and thus will give an option to US customers to once again be using Wallet of Satoshi. I will say this is one of the biggest Lightning wallets out there, one of the most used, but again, the big thing has been, well, it's custodial. So what's the trade-off there? Very, very easy for onboarding, very, very easy to get people to have their first transactions, but maybe not something that you're going to be putting your life savings in. Somebody down below did comment, for the love of all things holy, your custodial product is incredible. Continue to innovate there. Self-custody Lightning isn't the hill to die on, in my opinion. Now, I would disagree with that, but let's see what they said. They said, unfortunately, not possible in the US without KYC, or Know Your Customer, requiring ID. And KYC is a hill we're willing to die on. But don't worry, this ain't your grandma's wallet. We're going to be blown away. You're going to be blown away with how good it is. So I'm very hopeful to see how this pans out, and I think it'll be awesome to have even more options inside of the US. US has been kind of stuck with not great options in terms of wallets until recently, with this influx of new entrants to the market. One of which I'll touch on right now, because they just added something incredible that I may be testing out right this moment. This is AQUA Wallet. Again, I love these guys. They tweeted out, hey, we're recruiting 300 brave dolphins to test the new dolphin card. Everything is dolphin related in AQUA Wallet, obviously with the name. So they just say you can sign up, repost this, and follow us and join the 300. But what is the dolphin card? Basically, it is a reloadable Visa card that lives in your AQUA Wallet that you can use for online purchases in apps and all that kind of stuff, and you can reload it. I believe the limitations are spend up to $4,000 a month. There's no KYC required. I believe, I could be mistaken there, but things are going to be rolling out. Now, there are certain jurisdictions that will be exempt, and there will be different versions of it available depending on the laws in certain jurisdictions. But keep an eye out because this is awesome, and I'm kind of peeking at it. And given that I use AQUA Wallet so much, this is a pretty exciting development, and I can't wait to use it. Moving on, let's chat Bitcoin Core, Bitcoin Knots, and Libra Relay, and all of this stuff. So there was a tweet from Peter Todd the other day, and he said, grass-fed Bitcoin, Bitcoin Mechanic, is making ocean mining vulnerable to legal attack. Garbage Man is arguably a CFAA violation. So CFA violation, just so you're aware, and I'll pull it up here so you can see exactly what that is. But he's basically saying that this piece of software is a problem in that it violates the law, and thus ocean mining is opening themselves up to lawsuits. So CFAA is Computer Fraud and Abuse Act. It makes certain computer-related activities illegal, including unauthorized access to protected computers and causing damage through computer systems. A CFAA violation can be both a criminal offense and a basis for civil lawsuits by those who are harmed. Again, jumping back, let's read more on Peter Todd's tweet. Again, someone who wanted to F with Ocean could use this tweet to harass them by getting discovery on Ocean's operations. Not smart. Again, he may just be pointing this out there, but at the same time, I mean, Peter Todd has had to deal with a huge pain in the butt with lawsuits before, and Bitcoin Core developers have had to deal with lawsuits before in lawfare, and it just kind of seems not, to point this out and to make it an issue. And I would say egg on people to potentially form a lawsuit in and around this is, I've got to say, so what is he talking about? What is Garbage Man? And what is all this? It has to do with knots and core and all of that. And so the big issue here was people are getting mad that people are putting non-transactional data on the Bitcoin blockchain, and it tends to bloat things. It takes longer to download the Bitcoin blockchain and verify yourself. Knots is a Bitcoin implementation that allows you to set filters and prevent some of those things from being hosted in your mempool. Bitcoin Core has just loosened up the restrictions to make it easier for people to include that kind of stuff in blocks. And Libra Relay is a tool that allows people to more easily relay those things by purposely seeking out other Libra relays that are willing to host more data in their mempool and relay those types of transactions. And so what Garbage Man is, well, I'll let it explain itself here. Let's listen to the video, and then I'll break it down a little bit for you guys in terms of what was said here. So I'll just bring it back.
Hi guys, my name is Chris Guida, and this is my project, Garbage Man. I hope you enjoy. So the background for this project is there's been a lot of spam going around on Bitcoin in the mempool. And there's been this kind of like, most people don't like the spam, but I've seen a lot of this attitude of, well, we can't do anything to fight the spam. And so I thought it might be constructive and, return some morale to Bitcoiners to show that there actually is something that we can do to fight the spam. So there's this project that you may have heard of called Libra Relay. And Libra Relay's purpose is to facilitate the relay of garbage around the mempool so that it's easier for miners to find the garbage and put it into blocks. And so, and the way that it does this is it does something called preferential peering, which means that it actually has 4 additional slots that are reserved just for Libra Relay nodes. And the way that it does this is it actually it has a new service bit called Node Libra, which is bit number 29, I guess. And so this tells other Libra Relay nodes, hey, I'm a Libra Relay node too. I have a very permissive relay policy, and so I'm going to help you relay around garbage, right? So that what they do is they keep each other like in that preferential list, and they make sure that they keep those set connections very solid. So people on the internet use this as a rhetorical device to say, oh, well, spam filters won't work. They'll never work because Libra Relay. And that's just like the end of the argument, as though that's like a good argument. So I'm going to demonstrate that that's not a very good argument. So the cool thing about this preferential peering code is that it's open source. And so what that means is that you can basically just put this into any Bitcoin node and make it look like a Libra Relay node. And so, as you also might be aware, there's another project called Bitcoin Knots, which has a much more restrictive relay policy by default. It actually has much more controls, more granular control over the mempool policy settings. But most people who are running Knots nodes are probably doing it because they don't like the spam and they're trying to help filter it. So what I did, so what Garbage Man is it's a Knots node that pretends to be a Libra Relay node. And so the really cool thing about this is that there are way more Knots nodes on the network than Libra Relay nodes. And so Libra Relay is going to go out and it's going to find these Knots nodes that are pretending to be Libra Relay nodes, and it's going to make friends with them and keep them like high on its list, and it's going to make sure that it doesn't drop those connections. But of course, the Knots nodes are just throwing away the garbage, and so that's why I called it Garbage Man, because it's collecting the garbage and then it's throwing it away.
So I love this. It's such a funny way of doing things. Just literally preying on the alternative and saying, hey, like, okay, we'll go by those rules. You can run whatever you want. We'll run whatever we want. But fooling those that are utilizing Libra Relay that want to push out all of this non-transactional data, and saying, oh, you should partner up with me as a node to relay me all this stuff, and then just dumping that and not relaying it. I think it's hilarious. Now the whole point here, and again, this tweet here says this is why Peter Todd is so upset. Well, he's involved in the Libra Relay, and so he's basically saying that this is a CFAA violation because you're messing with computer systems in a malicious way. But if users actually utilize this freely, really just anybody running Knots, and it gets integrated as an option within Knots, then it's really, really hard to stop. And I think that's pretty neat. The other thing that I wanted to quickly show you over here on Clark Moody dashboard is the percentage of Knots nodes continues to grow. So it's at 8.8, almost 9%. And the other day I just saw, for the first time ever, number of Bitcoin Core nodes dropped below 90%. So again, it's just a way of, in my opinion, people communicating discontent with changes in implementations and kind of the direction that Core was taking, And so it effectively, in my opinion, communicates that. I did a full video on how to run knots if you're so inclined. If you don't want to, you can continue to run core or anything. But I would encourage you to investigate running your own Bitcoin node because it's a worthwhile endeavor. Anyways, moving on from this, I wanted to highlight a new feature released by Coldcard. It is called Coldcard Cosign, and let's take a quick look at the explanation.
Introducing Coldcard Cosigning. Easily create automated multisig wallets with user-defined spending policies. If a transaction violates any of your spending policies, your spending policy key won't sign the PSBT. When all spending conditions are met, your Coldcard will sign the PSBT with the main seed and the spending policy key, giving you access to the funds using just the 2 keys on your Coldcard. Learn more at coldcard.com.
All right, so the explain like I'm 5 is basically you can now set conditions on your Coldcard of spending policies. You can say the amount of Bitcoin spent in a single transaction is limited. You could limit the frequency of transactions. There must be 5 or 10 blocks or 100 blocks in between spends. You can whitelist addresses so you can only spend to those. And you can also add in special 2-factor authentication methods as well. So it gives you more granular control of even if somebody gets access to your Coldcard, there's a secondary key that says, hey, we want to check that all these things are within the parameters that we've set. Otherwise, we're not going to allow you to sign and spend, which is, again, just a really cool additional feature. So hats off to Coldcard. I'll probably do a video on this sometime in the coming weeks as well. To round out here, I did want to say, hey, I'm going to be out at BTC Prague next month. That's June 19th through 21st. Really looking forward to it. I'd love to see you there. There's a QR code on the screen, so if you want to come check it out. This is the largest Bitcoin conference in all of Europe. This will be my 3rd year attending. I love this event. It's so great. And the city is absolutely gorgeous. So I can't wait to be back. I'm going to be speaking. I'm moderating. I got a few things going on. So make sure you come out. Make sure you say hey. And again, if you want 10% off tickets, give that QR code a scan. And finally, of course, we're talking about all this awesome new stuff. Make sure if you need some additional help in your Bitcoin journey, if you want to make sure that your setup and your security is rock solid, you can reach out to my team over at bitcoinmentor.io and you can get yourself one-on-one sessions with incredible educators and have that peace of mind knowing that you've done things the right way. Anyways, guys, with that, I'm out. Have yourselves a full or evening wherever you may be. Keep stacking sats, keep stacking skills. I'm Ben with the BTC Sessions, and this was your session.